Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, June 24th, 2014. Well, we had just kind of a kind of a measuring day where the Bulls and the Bears were just kind of testing each other out, which is not really surprising, being that this is the first day of the new option cycle. So we had the rollover from the previous cycle, which we concluded on Friday with a quadruple witching, and now we're going to be rolling over into the new cycle. So it takes a little while for that to happen, and have more or less a light volume environment, and just kind of testing back and forth here. So I would expect that we'll probably start to see some well, let's say it this way: we should have a better chance for some more sustainable directional movement as we get deeper into this week. So starting tomorrow, if we start to develop a bias, I think we'll probably get a little bit better volume with it and have a little more tradable environment. So for the top line here, as far as the movement goes, there's really not too much. A little bit of weakness in the Russell relative to the broad market peers, but not really seeing too much here. The bond futures were down a little bit. Oil was down. Gold didn't do too much, but gold did help pretty much hold its gains from last week. We had very flat internals on the advanced decline line. On the New York side, lost a little bit of ground, but not too much on the Nasdaq side, and the trend was a little bit elevated at 0.96. So net, not a lot to take away from today from the top line, but let's drill down and take a look at where we are and refresh the levels for the broad market futures. All right, first up, let's take a look at the ES futures. The ES futures for the last couple of days have really just been kind of held in place here. We had a bid under the market here as we lifted up here, being at range high going into expiration. So obviously the options desks that were short calls needed to cover. Kept the bid under the market, lifted things up here a little bit. So for now, we've got 2 little days with a slight close below the open, which is never positive, but isn't really a big deal until we get rolling away from this little 2-day range. Once we do that, we want to pay special attention to the move that develops. So we've got a little bit more room before we get up to the 8-ace level on the GAN box at 2,000. Next challenge is going to be the 7-ace level. And certainly one of the key things is that we're 10 bars up now into the exhaustion phase of the seeker. So if we get to 13, that's going to mark the end of the impulse and put in place an exhaustion warning. One thing to be aware of is that we really haven't made much distance here above the one candle. The one candle's here. We're already 10 bars up now, so there's not going to be likely a lot of extension unless we get 3 days to the upside here. They're just a blow off and go parabolic to the upside. But nonetheless, once we reach 13, that will be a notable development and indicate the end of that advance, or at least impulse. Here the NQ futures, a little different look to it. We're only 8 bars up here in the countdown. And note that we are decently above the 8-ace level, while in the broad market side we haven't even hit it yet. So if we do continue to the upside, the plus 2-ace level is going to be very, very big. It's going to be very formidable. It's one of the big levels that we watch. So coming in about 38.28, that's going to be a big head knocker. Note that we've got a little bit better extension here on the Nasdaq side versus the one candle in this countdown, even though we've got a little more room to go. So key support remains at the 10 EMA, resistance at the plus 2-ace level. We don't spend a whole lot of time looking at the Russell Index, but I just wanted to point out that we are right in a very major area. We're right at the 8-ace level here. We're only 5 bars up in the 1 through 9 startup phase, so we could potentially keep going before we get to 9 and feel the effects from that. But I do think that we're going to feel the effects from the 8-ace level at 1187.5 here on the GAN box. The bonds here represented by the TLT were lower on the day, but are still just trapped in this multi-day range, bouncing back and forth between the 112.50 area at 4-ace and the 3-ace level at 110.94. So we really need to resolve this range to get some better clarification. Here's the MACD. The MACD is below the 0 line and does have a negative posture to it, but really hasn't picked up a good angle of ascent here below the 0 line. So if we do start to pick up speed below the 0 line here, we definitely could start to gather some momentum and put this 2-ace level into play. Crude futures were a little bit weaker on the day, but still in the area of the 10 EMA. So we haven't switched to short-term negative just yet. This 8-ace area might be a draw. So we've got some pretty good support here at the 7-ace level at about 104.5, which is roughly the area of the previous triple top. Here's 1, here's 2, and here's 3. So we're just kind of resting here at a very key area and losing a little bit of momentum, but still positive, being above the 10 EMA for now. Gold futures on the day, not too bad, holding above this 4-ace level at 1312.5. Still kind of a multi-day wind up here. So once we break out of this little this pennant formation that we're in, this should have some real punch to it. Note that the MACD has broken above the 0 line. It does have some momentum to it. Most of the momentum came from this big range expansion candle the day after the Fed announcement, but certainly we're winding up with power right now in this little pennant formation. Just want to run through the internals fairly quickly. The New York Stock Exchange side is still fairly positive. Didn't really do anything today. Certainly hasn't rolled down, but hasn't really made any real progress in the last couple days. The Nasdaq side has hit a head wall here and has not been able to punch through this double top right here. It still has a positive trend here hanging above the DTL that's not pictured here, but I'm sure you can see the DTL. Here's 1 touch, 2, and 3. So we're still above that. If we break that to the downside, I'll mark it on the chart, and we'll pay attention to that. But for now, I'm just kind of treading water. Here's a look at the Dow Gold ratio, which is always fun to look at, especially if you're one of the classic technical analysis type guys like I am. Here's a look at the Dow versus gold. So when this ratio is on the rise, this is a ratio chart. That means there's a strength in favor of equities over gold. Definitely ran into some trouble here at this high water mark. Broke down here a little bit where gold was starting to come back into favor and have come back up near the previous high of the ratio, but have not taken it out yet. So the market's attempting to make new highs here in the Dow, but the gold futures really haven't given up that ground. So right now there's actually a little bit of movement in favor of gold versus the Dow. So want to make sure we stay on top of this, because this is definitely one of the classic asset allocation indicators. So right now we definitely could see the potential for some strength coming into gold. Just going to manipulate this line here and move it down. If this little DTL that's been in place here does yield, and we do break this ratio to the downside, that's going to be a clear sign that gold is starting to reassert itself as an asset class that is attracting capital. Here's another fun one to look at. This is a relative performance chart of gold versus the VIX. Gold's starting to pick up here a little bit to the upside, even though the VIX is kind of staying at range low. A lot of times gold can be a leading indicator here where it starts to move up ahead of the VIX. You can see it happening here at the left of the chart where gold is on its way up while the VIX is still declining. We had this pretty good move to the upside here that was kind of signaled and telegraphed by gold, while the VIX finally ultimately caught up to it a little bit later. Then we started to roll to the downside here. Had this negative rollover here on gold, but now we're starting to see the potential of gold starting to assert itself, and perhaps the VIX is going to catch up to it. So let's keep an eye on this chart. All right, finally, let's take a look at the individual sectors ranked from best to worst. The XAU was top gun on the day. Commodity-related equity index was pretty strong too, definitely outpacing the market by a good amount. The XOI, which has a lot of natural gas in it as well, was pretty strong. So natural gas and the oil stocks were reasonably strong today, while the coal stocks today were very, very weak. Bottom of the index was the airlines. Those are still in kind of rollover mode here, so be careful on those. I would definitely have some of those ready on the short side. The BTK index, one of the big NASDAQ components, was also fairly weak. And the transports, which is kind of a broader group of the airlines, was weaker on the day as well, definitely underperforming the market. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.